Get in the management of Ester Industries, Arvind Singhania, the chairman of Ester Industries. Now, a few days back, the company announced that they will be doing a preferential issue of around 100 crore rupees. Now, what's more interesting here is that nearly 25% of this funds will be raised from RJ Corp, which is the promoter company of Varun Beverages. So, Arvind sir, firstly, my question to you would be any synergies that you're expecting out of this fundraise that you're doing currently? Anything that you're, any kind of synergies that you're seeing with RJ Corp or Varun Beverages going forward?
Well, the synergies will come later on, something that we can't discuss right now. We are discussing on certain various options. But besides that, I think RJ Corp and the promoter of RJ Corp, Mr. Ravi Japuria, sees a lot of value in our business going forward, and which is why he has invested in this. So it's largely because he finds the business model that we have very, very robust. Yes, we are going through certain downturn right now, which is more capacity overhang related as far as the film business is concerned. And as far as the specialty polymer business is concerned, it's only because of the downturn and recession in Europe and America, which are our major markets. We expect a bounce back in the specialty polymer business very, very shortly. Maybe in the next couple of months, we should be back to normal. Not couple of months, sorry, a couple of quarters. And the capacity overhang as far as polyester film is concerned may take a little bit longer, but we expect to start seeing some improvements very shortly. So overall, all in all the investors see our business model as a very robust business model, and they see long-term value in it. And that's the reason they have invested.
Also, sir, if you could just tell us how will you be utilizing this funds that you're raising around 100 crore rupees?
Mostly it will be used to shore up the cash flow and to repay the banks, that the loans that we have, to make sure that we repay all our interest and principal liabilities on time.
Okay, that point is taken, Arvind, but what will it take your debt down to? And there will also be some savings in terms of the interest costs, right? So how would the profitability look post this?
Well, with this raise of 100 crores, we already have another 100 crores, more than 100 crores in our treasury. And so total of 200 crores. We are also looking at other options of, swapping our debt so that we have a better cash flow arrangement. And with the reduction of debt, maybe with about 150 crores, this will have a corresponding effect in reduction in interest rate.
Yeah, because I'm looking at your numbers, and for now, on the bottom line, there seems to be losses which are continuing. Do you expect to break even or turn into profitability in FY25? And you're right now doing a run rate of around 250 crores a quarter. In FY25, is a number of, let's say, 1,200 to 1,500 crores possible?
Yes, it's entirely possible because there is a very robust growth in the polyester film demand. So as far as the business model is concerned, it's very, very strong. The flexible packaging market is growing at anything between 12 to 14% per annum domestically and 6% globally. So this is a very, very robust demand growth. It's only a capacity overhang. Too much capacity got created in too short a period. And we expect this capacity overhang to get cleared out over the next maybe 1 year to 18 months or 2 years maximum, and to start seeing improvements. So there is an very good possibility that we will show break even in FY25.
And in terms of margins and top line, what should we expect?
Well, there should be a substantial improvement in top line and bottom line in FY25, because we expect a big bounce back in our specialty polymer business. Like I said, within the next couple of quarters, we should be back to pre-COVID levels. In fact, in the first half of FY23, we had reached a run rate of 300 crores with EBITDA margins in the region of about 35%. And we expect, and only because of the American and European recession, look at the specialty chemical space across the board. You have all the data of all the other companies in specialty chemicals business. Everybody's volumes are down currently because of the European and American markets. And we expect this reversal to start very shortly. In fact, we have already started to see this in Q4 this year. And we expect this to continue to grow. In a couple of quarters, I'm hoping for it to become back to normal.
So you're saying normal would be close to 300 crores per quarter on the top line, and a margin?
300 crores? No. On specialty polymer business, it will be 300 crores per annum, with EBIT margins of about 35%. Plus, we expect to start seeing some improvement in the film business as well, because there is a demand growth. On top of that, please note that as per the new plastic waste management rules, it is mandated that from 1st of April 25, there will be a requirement of 10% recycled content in all flexible packaging. And this means a special bump up for polyester, because polyester film is the only substrate which can offer recycled content in the base film. No other substrate, including polypropylene, can offer any kind of recycled content. So we will see a big bump up for demand in polyester film going forward.
Okay, waiting for that bump up, Mr. Arvind. We'll watch out for that space as and when that rebound happens in a couple of quarters. Appreciate you making time and speaking with ET now.